Welcome to the Our Readiness Lens podcast, where we're focused on numbers and driven by results. I'm your host, Sheri Radler, and each week we'll take a closer look at practical ways to get your business ready for what's next. From firm planning for the upcoming quarter to finding the right health insurance for your team. Whether you're a small or mid-sized business owner looking for advisory support or just want to better understand your numbers, you're in the right place. Let's get started. Well, welcome to episode 9 of Our Readiness Lens. And today we are actually talking about strategic planning and how taking the time along your journey to stop and collectively speak to people within your C-suite, your mindset, will open up and it becomes a growth multiplier for your business. So when we sit here as a CAS firm, my firm, we sit solidly in operations. We are working very much with our clients within their business, outloading what are your dreams, what are your goals, why are you in this business, and what are we trying to accomplish? So it feels like I and my firm is sitting very deep in operation land, accounting, advisory, payroll, and how do we do and improve the asset in the business we're working on here. But that's only part of our people's pie. And the truth is, while I'm working deeply with them on their pie, their world is made up of much bigger pieces. Their families, their estates, their spouses, their legacies, there are bigger pieces to their financial picture and legacy that we need to bring into our consideration and incorporate into our decision making. And it is critical, at least in our mindset, that this becomes a conversation we introduce our clients to early. When I was in big corporate, working closely with our tax groups was just part of it. We talked to them ongoing, quarterly, ongoing, big decisions we ran by them. So we try to introduce that mindset as we are working with our clients. And today I've invited two of the people I've worked with for years, CFOs, both in tax, very much into that framework of it, East Coast, West Coast. And I've asked Denise Hanlon and Jane Watkins to come in and talk about how their firm sits along with what I do as a CAS firm and how together we actually provide a stronger framework for clients.
So Denise Hanlon, Hanlon CPA LLC. I'm located outside of Boston in a suburb. I find that the business owner is more successful with that readiness mindset. How my firm works with clients, we may do bookkeeping, but we work with lots of clients who have their own accounting team. Not only do they have the accounting team, they have the tax piece, strategy, and planning, but we also work with their attorneys and financial advisors because you need to not only have that short-sighted 12-month goal, but a lot of my clients are 45 to 65 years old. They need to be planning for retirement. So every year we need to not only look at that year, but how are those decisions going to affect when they retire, when they sell the business?
Right. And so, Jane, what do you see when your clients are focused only in the business? What are they missing because they're looking down or they're looking inside? And what are they missing? What are you seeing?
Well, thanks, Sheri. Thanks for having me on today. Jane Watkins. I'm CPA. Tax Time Services, Inc. is the firm that I run, based here on the West Coast in San Diego. And I love this conversation because it just resonates with me. Like Denise, we have lots of clients that are always really focused on just that one part. They're not looking at that big picture. And there's so much more value that we can bring to them in helping them look through that lens and see a wide angle view instead of, looking through just, narrowly. I think the thing that clients don't like the most is what I hear is surprises. And through having much more of a narrow view, that's what they end up with. Like Denise was talking about, if they're not thinking about retirement and they're not planning for that, even though they might be putting money aside, that's one piece of it. Looking at how that's going to play out for them, or even the structure of their business, how they're holding it, if they want to hand it down to their children, if they want it to, be a legacy, is it set up right to do that? And so just things like that.
And some of those decisions aren't known at the beginning, because think of it, we start working with clients that open up a business or they're a young business. And hey, they've opened up an S Corp and they've grown, and that 3 million business grows to a 10, it grows up. The decisions that they need to be making along that journey, you can't just take an S Corp and set it and forget it forever. Isn't that a consideration that needs to be, well, as we reach certain stages?
Yeah, for sure. And I think the S Corp is a really interesting one, especially where you've got families where they're going to potentially go wider than just children, perhaps, right? I've got one client and they have nieces and nephews and, things like that. And so that structure, if you want to give part ownership or things like that to extended family members, maybe isn't the best structure for doing that in. And so, just changing it out to a C Corp from an S Corp is an easy thing to do on a piece of paper. But in terms of calculating out what the tax ramifications, like the cash flow implications might be, that's a much bigger discussion.
Yeah. So if they never come back and have that conversation. So what do you guys find? Why do people not come conversation? I hear a lot like I don't know what to ask. What do you find?
I think personally what I feel is that tax is one of those areas in particular, if we talk about the tax piece, where people feel like they don't understand. And so, a lot of CPAs talk a lot of tax technology or a lot of sort of our acronyms and things like that. And it just makes people feel uncomfortable, like they just don't feel knowledgeable in it, but also they maybe struggle to follow along. I think there's a really big trend right now to try and use diagrams and simple ways of presenting different ideas for, to convey the message and help clients understand. Going through some of these planning ideas with a client over the phone, that can be really hard, as opposed to where we used to be in the office all the time. Maybe we get up on the whiteboard and draw some pictures and, and now that's sort of shifted into more of the Zoom mentality and I think it's harder for clients to picture and understand and follow along.
Denise, what do you think?
No, I absolutely agree. And it's the kind of lack of their knowledge. Some people come in and they have strong both accounting knowledge, industry knowledge, and they are able to ask the right questions. But tax is complicated. And what seems like a good idea, if they don't talk about it before they put things into action, could turn around and end up being a tax liability that was unexpected.
Yeah, we've talked about that just in some of our conversations before, some of those nightmare stories. I think I told you guys how years ago I was involved in a business sale and the company was acquired by an international partner. And it all looked good on paper. And then it came to tax time and there was some box next checked and some election not chosen. And it became like a real firestorm for a while. Like it was going back and forth through attorneys. Like, did it affect the sale? Did we need to go back on that? Those type of things. Because what the intent was and what actually happened was not. And it was a miss in the planning. I'm sure you guys have plenty of stories. So tell us a couple.
The ones that hit the hardest are probably where the client does something that they think it sounds like a good idea, or they've read it seen it on TikTok, or they've read it in the newspaper. One might be, for example, where someone who's got a lot of property decides that they're going to transfer title to their children outright now because, they've got room in their gifting to do that. And so, they go ahead and do it. And what they don't realize is they're actually, locking in maybe a higher basis at the time that they're doing that, as opposed to if it was bequeathed in a will or a trust or, later on down the line, the basis that would have been taken would have been, the original basis. And so, things like that where they think it's a great idea and they think they're actually ahead of the game, but in actual fact, that's not the case.
Okay.
And for me, I've encountered people that kind of lack full communication with their kind of accounting team. And I've done planning thinking that income and expenses are reported through a certain point during the year. We make assumptions to make it annual, and come to find out when we do the tax return, large tax bill, because the bookkeeper or whoever they're working with didn't have things up to date.
Okay.
There's up the plan.
So you're making a great point for this collective, this coordination that we cannot continue to work in silos for our clients. You know, if we're working with our business clients and we're trying to help them achieve, and we come in and it's like, this is part of it. We understand your business is only one part of your world. But seriously, if you didn't come in to create this business with an intent of, I'm going to say, coming out ahead at the end, you probably wouldn't have done it. So the idea that as we go through this, that we don't understand that impacts, decisions, that all these pieces are not separate, I guess is where I'm trying to go. Every decision you make in the business affects your life. Every decision, your life decisions maybe not, but you're not going to achieve them if this business doesn't get there. All those legacy giftings, those retirement homes. So that's where this ongoing coordination, you know, you guys can set the strategy, you know, the estimated taxes, you know, and I know we've all seen it. You come out at the end of the year and you tell a business client, these are the estimated tax payments I suggest and recommend you make next year. You provide it down, and a year later, you're like, well, what kind of estimated tax payments did you make? And the most common answer is?
None.
But that's it. But that's where the planning and the coordination comes in, because you guys set that. And then it's up to us that are working in the business on that month to month, day to day. You know, it's kind of like you guys are setting the map, but we're almost driving the car. And it's like, okay, monthly, have you set aside those funds? Have we made that payment? Because your role is to tell us what they're supposed to be doing, or tell them what they're supposed to be doing. But if we're going to sit in here and work with them, it's trying to hold their feet to the fire and remind them that this is not just a one time a year conversation. Did you call them and talk to them about it? So, I mean, that is part of it, right?
Yeah, I mean, it's going back to the whole pie mentality, or also, I mean, the other way to analogize it is like the life cycle, right? Like there's sort of the annual life cycle or pie, and then there's like a bigger pie outside that, which is, you know, every looking ahead, you know, many years. But if you just think about the annual pie, right? I mean, it's got a lot of different pieces to it, and you have to plug in all those different components. You know, if you're missing a piece of the pie, it's not complete.
Very much so. And, you know, so it's also the conversations that, you know, one of the messages we're trying to get across to our clients is these are not two distinct conversations. You want to build a vehicle fleet. You know, we had a client a couple of years ago that wanted to, you know, they were growing nationally and they wanted nice branded, pretty vehicles. And we had to put together an entire capitalization plan. How are we going to buy these vehicles? How are we going to finance them? How are they going to get depreciated? Because we're not going to want to carry. But we did not go into this without having conversations with their tax group. Because it was like, well, we can do this, but let's make sure what the decisions we're making here aren't going to bite us on the back end. And that's the critical part, that it's like, okay, let's pick up the phone and call the attorney. You want to hire someone and you're making all these promises on compensation and dun, 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 dun. Have we talked to the tax people about this? Have we talked to the attorney about this? Because I can document it in your books. But it's a short-sighted mindset to only make these decisions inside the business.
The whole thing is that we can have a plan, but we really need them to follow through on the plan. And it's hard with a business owner because they're very entrepreneurial. So they're not seeing things in the really detailed sort of sense like we are.
Okay, so when you go and look at that client, what are some of those low hangings, or like if you're sitting here going, okay, these are some of the things we see so commonly that these are the first things we look for?
Jane, do you?
Yeah, like on a transactional basis, like if we're thinking about like the accounting function, right? I mean, it's funny just how I probably think differently to you, Sheri. Like when I open a set of books and I'm looking at the P&L, maybe, on a monthly basis, doing a review once it's closed out. The things that, will jump out to me are probably different things that will jump out to you, right? Like meals and entertainment bumped right up. And I'm like, oh my goodness, that's that's an adjustment, right? Like that's an add back. That's going to affect the bottom line. Looking to see if there's things that have happened on the P&L that should have been on the balance sheet or might have some kind of, tax impact. So I just think it's just a different way of looking at it, right? Like I'm looking at the balance sheet and I'm like, what does distributions look like? What's in there? Is it all distributions? What's the timing of it? And, just things like that. And so I just think that when we open those books and we look at them, we see a bunch of different things jump out than what like a bookkeeper does, right? A bookkeeper is like, have we recorded these all right? Do we have all the vendors in here? Have we got the numbers right? Like, did it reconcile? That's not what I'm looking at.
Yeah.
It's just,
And I mean, often that's not what we're looking at because we're working with them on, are your prices right? Are your margins right?
Yeah.
What's your variance to budget? Because we're holding them on the feet in the fire on the operational. This is the goal we set out. This is what we're trying to accomplish. Why have we not achieved this? Where did the process break down internally? So that, we always call it the lens, but it's like the Rubik's Cube. We're looking at it through here. You're looking at it from down. You're looking at it top down. We're looking at it across. The client so often is looking at it bottom line only.
yeah.
Definitely.
No, they're in their bank account, right? I mean, that's typically where their focus sits. And that's why I think it is so dangerous when it's just a once a year conversation, especially if it's a dynamic business and there's things that are changing, throughout the year, which currently, I'm finding is the case with most of our clients. Our clients, 4 or 5 years ago, it was pretty consistent year over year, but now we're seeing a lot of movement and change in things as the year goes on.
So as clients come in, they have a lot of needs, and I mean, part of it is okay. So we've done a great conversation of saying where they're missing. These are some of the gaps. You're missing some opportunities. So let's frame it. How does it work best? I mean, we're here because our firms do work well together, because we come from other sides. So help me talk to the clients about why having this collaborative C-suite group, introducing your attorney to your accountant and your accountant to your wealth advisor and your wealth advisor to your tax person, that all of us together, we all want to be on their team. We want to sit around the table and help them and be there with them so they're not making those decisions in silos.
I think the other day when we talked about it, we were saying it's like a village, right? We say it takes a village to raise a child. Well, it's sort of the same mentality with your company and your business. You need this village of people around you who are to some degree like-minded and aligned, right? Like they all have to be aligned on your ultimate goal with the client's business. What is their ultimate, goal? It's fine if they're a little bit different in some ways, but you don't want an investment, banker or wealth management person who's taking huge risks, and the client is a very sort of non-risk taking kind of person. So it is important that they, think about that, how the team is put together. But I also think that people struggle to put that team together, right? And I think Denise has, had some luck in doing that in the past.
I kind of have the analogy that a stool isn't going to stand up with one leg. It's not really going to stand up with two legs. So you need a team of 3 to 4 people. So your attorney, your financial advisor, kind of a controller, CFO sort of person, and your tax person, all working together. So kind of that team mentality. Your stool's not going to, stand up, but you're not going to move ahead in the best way.
No, I like that analogy because that's exactly it. Going back to, we all are looking at your business with a slightly different perspective, but all of us have your best interests in mind. So by coming in, you get to say, my dream is to become this. Okay, well, from the accounting and the tax and the financial, and if you achieve this, we're going to help you get to that. What is that outcome? Why did you come into this world? Why did you come into this business? What do you want it to become? So, I think that's a great point. So any suggestions on how to go find those resources? Jane, you were talking about it. It is hard to find. And, because Google is never our friend. I got to tell you, we have come up and we've started collecting people that we like. Like mind, get along, that type of thing. Because I'll be honest, every time it feels like I send someone to Google, I don't have an answer for you. They come back with the most obscure response, like page 10 of payroll providers, like the top 10 payroll providers in this country weren't good enough. You went to Bob's payroll. It's the same thing for advisory. And sadly, the shiny ones on TikTok and on the sales aren't always the ones that I necessarily want to introduce my clients to. So how do you recommend?
Yeah. I think, if you have a provider that you're working with that you really like, I think the best place to start is with them, right? So if it's Sheri, I think have that conversation with Sheri. Hey, have you got a lawyer that you like, right? I've got a great lawyer. I've got a lawyer I love, and I'll, recommend her out if I think she's a good fit for you. And same with, wealth management too. But I think failing that, I think, ask around your family, ask around your friends. What do you do? Who do you use? How do you like them? I think referrals is probably the best way. And I think too, that helps people with their comfort, right? They go in sort of with this, a little bit of comfort that the person that referred them, is someone that they know. But I do think that there's something to be said about picking sort of people that are used to being part of a village or teaming together, right? If you don't consider that, you could end up with a lot of different random people that aren't cohesive and don't work well together, and that's difficult.
Denise, your thoughts?
Definitely. You have to go with someone or go to someone you respect to get the referrals. But then you really need to connect those professionals that you're working with together so that we can all work to get your plan where you need to be. I've helped people kind of with retirement planning. That is kind of my sweet spot. That I help the S Corps to have the reasonable compensation, kind of measuring the right amount of money that they're putting into their SEP or whatever retirement vehicle suits them best, to make sure they're getting the right amounts in for Social Security, and that we're thinking ahead to when they retire and start drawing. Are there IRMA adjustments that we need to be aware of? It's the whole 9 yards that we need to be looking at.
And this is when I slide all those cards over to y'all side of the table. Because it is, operationally, it's like, okay, we want to maximize this. But the IRC changes every year. So it's like, okay, like I say, I keep, I'm almost enough to be dangerous in some of those, because it's like I can take you here, and it's like we need to leverage, and it's like just bring in the expert. It's like everything from, we want to value your business, we want to value your property, we want to value, everything else. Let's bring in that resource that is the expert. Reasonable comp for Denise. Leveraging that. Because when you're a high net worth individual, a doctor or somebody like that running a practice, those conversations have to be had. And that goes back to the timing. Because I know I talk to business owners and they're like, I'm not big enough yet to be needing to worry about that. And I'm like, whoa, dude. Same as you need to start setting money aside from retirement, that first part-time job in high school. This conversation starts as soon as we start making some money in your business. The end goal always has to be on the board.
Yeah, and even further, even like when you're starting it up and you're putting money into it, right? And it's much more simple when it's all within the family, right? Husband and wife, or 100% owned by the wife, or an entrepreneur. It's once you start diverging and you're a partner with an unrelated party, right? That's when it starts to get a little tricky. Now you've both put $100,000 into the business. What happens if one of you die? right? And then you discover that your partner didn't have a will, a trust, nothing. And now you've got half of your business tied up in probate. And, depending on where you live, but, that's huge. And that could really stifle the business. It could, tie up funds. It can freeze bank accounts. Like, it does crazy things. And so that's where, we think about it being an end result, like an end answer. But going into business with someone, man, there's a lot of things that legal Zoom don't think, make you think about if you're setting it up that cheap and easy route. And so that is one of the things that I definitely would encourage people to explore more, is that wills, trusts, estate planning. I mean, that's where I've seen that in the last few years, maybe, I don't know, half a dozen times where money or buildings that they want to sell or different things are stuck in probate and sitting there for, 18 months, 2 years.
We had one of our team members worked for an engineering firm for years, and during COVID, the owner of that firm passed away. And he was in his 70s, and turned out there was no will. So you have an engineering firm running with 70-some employees that all the first phone call I got was, can we continue to process payroll on ADP? Because his electronic signatures on the check and he has passed away. I mean, that was the very first question on the phone call. And it was like, well, shh, be very quiet about this and go for a week. But I mean, it was like, who can sign? Who was the children? And truthfully, I want to say it was probably just last year that the business finally wound down and sold, because of just the involvement and the chaos and that type of thing. And it was just to that degree. Like, there was no backstop in the organization of, if you're going to be out of the office for a few weeks because you're sick, who signs the checks?
Right.
If something happens to you, what happens there? Who steps up and runs the place? In this case, 3 children from out of state converged. One immediately, his husband got way too involved in decision making or walking in the door, wanting to make decisions. This like boiled up and bubbled up, like you threw a Mentos at a Diet Coke.
Yeah. No, do you know what I see the most? And even in my full to this myself, why we don't do those things, why we don't put those things in place in our business, why we don't have our wills with, all our different beneficiaries and trustees and things and guardians for our kids and stuff. It's because it's so hard to make those decisions. And, it's hard to decide, who do I want to stand in my place? Who do I want to make? And so my advice to everyone there would be this. Make it just on the spot, choose, like, just, say, do you know what, we're going to have this done by the end of the month or whatever. Pick people. It doesn't matter if they're not the right people. At least then you have something in place and you can then think about it and you can go back and you can update that and you can change it. They're usually really easy changes to make. But that way, at least you've got this contingency plan in place. And so I tell that to all my friends, like, pick your guardians for your kids, like, put them in your will. If you change your mind next week, go in and change it, but it's better to have something than nothing. And I think it's the same with running the business. Have the person that's the backup signer on the checks. You change your mind, it's fine. Go to the bank and change it.
Yeah. I mean, this is not a permanent thing, but you almost, that goes back to reactive versus proactive. You don't want to make a decision, so you ostrich. Then something happens and then you're on fire and you're just making all these decisions. And at that point, you're not even, all of a sudden you don't care near as much as when you had time to think it through. Because now it's just get it done. You don't care who steps up, gets it done, sign it, forge my name, take my name, because at that point you're like, you don't care. A week ago, you overthought it to the point to analysis paralysis.
Yeah, and I think you mentioned this the other day, like, you don't need to do it all at once either, right? I think that's the other thing that it becomes overwhelming. It's like, oh my gosh, I've got to do an estate plan and wealth management and, no, we can, as advisors, we can help you, like, look at the whole pie, look at the life cycle. It's like, okay, this year, what are we going to focus on? You want to pay your estimated taxes on time so you don't have penalties and interest. We're going to focus on that this year. When we've got that in place, I've got a really great lawyer that I want you to talk to about your estate planning. You know what I mean? Like we can make a plan and a pathway to get there.
Becoming disabled and incapacitated, especially, whether personally or having a business, is really detrimental. And you can't get those documents signed when that occurs. It has to be done before.
100%. Okay. Trying to think of what I've not thought of. I mean, we've talked about the importance, and it's not just the wealth, and it's not just the taxes, the account, and it's the whole circle. I mean, your stool analogy, the 3 or 4 people, you name the top 4. I mean, you should be having conversations. Not everything's an exit plan because you want it to be an exit plan, folks. We talk about we're growing our business. You went into it for a reason. If you didn't go into it with a reason of, and this is what I'm hoping to achieve, please stop and have that conversation. Why are you here? Because if you just opened up your doors one day, and I say that, I was an accidental entrepreneur. I wasn't a kid that was dying. I wasn't selling toothpicks on the school bus, but the path got me here. But when I put my my feet on it, I had a couple, like, this was what I hoped to do 10 years, but first year, second year, this was the plan, the goal. So kind of come up with that goal, because some of what that goal is going to decide on some of these decisions. It's going to roll it back. Jane mentioned it earlier. Are we growing this to sell it? Are we growing this to hand it down? Is this going to be a legacy for our kid? Are we planning on to work in it forever? Or are we bundling it up and we're putting a cherry on top, and this is going to be our retirement vehicle when I sell this? But whatever that goal is, you've got to backstep it years to kind of get there successfully.
Oh, definitely.
No, I agree. And sorry, go ahead, Denise.
I was going to say, when you go to sell the business, they want to see 3 to 5 years of the past history of the business. You can't wait for, as we typically see, something occurs, I need to sell the business. And then you're like, well, having a little more running room would have been nice. Here we are.
I think, too, the other thing that I would just mention is it doesn't really matter your size, right? Like, if you're a big business, obviously you're going to have a lot more to think about, a lot more pieces of the pie to kind of consider. But even as just a small business, making sure that you've at least touched these things, right? Like at some point, I think is important as well, especially for the estate planning piece.
And I mean, I actually agree with that. And I talk to our business owners on the other side. The minute you have taken on an employee, you have taken on a responsibility for someone else's family, their livelihood. And if you haven't taken these steps within your business to at least touched on it, have a plan, a mindset, because we've all seen businesses that have fallen apart because that leader has gotten sick, has had to step out, and the business that they thought they had really running solidly was too dependent on them, and it falls down. And yes, that is terrible for you. That is terrible for you as a business owner. But it is catastrophic for that team that you have. We're in the accounting industry, and we saw an announcement. There is a software tech company in the accounting industry that has been around for years and has been a solid player in growth coming up. And I can't even tell you how many employees they have now. But we've watched them grow. We've all watched them grow. And just Saturday, they sent out an email saying, just do some macroeconomic issues, lost a huge client, and they were upside down in an investment, but they're like, their runway is not long enough. And they announced that they're closing their doors just that fast. Because 90 days ago, they were on a totally different trajectory. Now, can't tell you their story, don't know really what happened, but it was the fact that things happen and can happen so fast that no matter how well you think you're queued up, you can get knocked out. Mm-hmm. So the more, the more we can have pieces in the place, the more we can try to strengthen you and have frameworks and get you ready. We say it's for an opportunity or a crisis. In this case, it happened just enough that they couldn't recover. But our goal is always to keep our clients in a place where they can ride those waves. But it can happen just that fast. So as we kind of wandered around, what's your takeaway? Coming into 2026, new resolutions, here's the plan, guys. You said start one place. What's your recommendation? What's your go-to piece of advice?
I think my advice is to take that first step, and to ask the questions. I think it is hard for people to sometimes muster up the courage to talk about a topic that they're not familiar with, but be honest about it. Say, look, I'm uncomfortable. I don't know anything about this, but I really need some help. And I recognize that. I don't want to do it all at once, but I want to come up with a plan, and I want to make sure I've got my bases covered. So I think, conversation one at a time, but just start.
Okay. And Denise?
The planning is invaluable. You need to kind of analyze your situation, kind of like what Jane said, pick that one thing. I think when you look at everything, it becomes overwhelming. It's the how do you eat an elephant sort of analogy. But if you just pick one thing and start with it, and really evaluate, because a lot of small business owners really think, oh, I don't have the money for this, the cash flow for it. When you have a professional kind of like Sheri that's managing things, you can see how you can fit this in to the cash flow so that you are protected. A lot of these things that we talked about is really about protecting you, the business owner, and your business. You really should, obviously watch the costs, but not be so concerned about the costs that you don't do anything.
No, that's true. We need that architecture. You guys are like the architecture, the architect. You're designing that long range of this is how we're going to navigate these taxations, these complexities, and get you, because that is we all hear that. There's not a business owner listening to this podcast that has not said this words. Tell me how I can save money in taxes. Mm-hmm. This is how. Yeah. You quit 100%. Waiting till the end of the year for your numbers to get dropped into the return to get the answer. And you start having strategic decisions at the beginning and say, help me map out this journey to best benefit my end goal.
Yeah, 100%. And to use your architect analogy, you can have an architect that's building you a basic, simple plan, right, to build your house or your tax plan, or you can have a super sophisticated, high-end, using some great planning strategies. But ultimately, it's your choice, right? You just have to, again, go into it with your budget. To what Denise said, how much you want to spend kind of will help define that. But yeah, it's not a one-stop shop, right? It can be tailored.
Absolutely. Absolutely. Okay, well, I thank you both for being part of this. This part of the Readiness Lens is really about how using the strategic mindset of your collective advisory group can help springboard you into a growth for your business, that staying inside DIYing it is never going to help you get there. We started touching on some of the things that are going to be in our next topic, which is going to be about the business killers. What are the things that can come in and knock you off course? What are the items that everything we talk about in business and operational and readiness that we're trying to prep up and strengthen you to be able to weather? So, that's going to be our next episode. So we hope you come back on that one. Hey, if you'd like to implement this plan, download the resource in our show notes for Our Readiness Lens and the strategic resource for springboarding your business growth. Hope to see you next time. Best. Thanks for joining me on the Our Readiness Lens podcast. If you found this episode helpful, connect with me on LinkedIn and follow along on Instagram for more tips and resources. And if you're ready to take your business to the next level, Be sure to rate the podcast and subscribe so you never miss an upcoming episode. Until next time, keep your numbers clear and your goals in focus.